This is Jeff Cooper with the Daily Market Report coming to you midday on Friday, January 18th. Today I'm going to show you two of my favorite setups. Obviously, the goal of short-term traders is to capture big gains as quickly as possible. The task, of course, at hand is to identify setups that lead to explosive short-term moves. I'm going to show you two of my favorite setups in this video. They both combine a signal bar with pattern. Putting these two elements together stack the odds in your favor. And when the market is in FOMO mode, fear of missing out, and traders are chasing, the odds for these big moves only increase. My Thursday night stock report used LRCX, Lam Research, as a long day trade setup. This is a daily LRCX we're looking at here. The setup was based on Thursday's, that's right here, large range outside up day. In other words, the low was below the prior day's low and the high was above the prior day's high. So you have a outside up day and it's a large range. Typically, range precedes price. You have a large range, it indicates higher momentum typically. At the same time, putting the pieces together, you can see that this LROD, or large range outside up day, originated from a back test of the 20-day moving average. That's this red line here, and it's a rising 20-day moving average. A pullback to the 20-day MA is referred to by many traders as a holy grail setup because of its efficacy in signaling continuation moves. It clearly did so in this case. The setup left LRCX flirting with recapturing its 50-day moving average, this blue line here. The 50-day moving average on Thursday's close was at 141, just over the 140 strike. The presumption was follow-through would see LRCX magnetized to at least the 145 strike. So that was the play, 141 and change to 145. However, when 145 was cleared with authority, LRCX ripped to the 150 strike. This is a strategy I call bowling for strikes. At the same time, notice that the 1 month a 1 month bottoming cup and handle. Here's the cup, or really more like a stein and handle. But here's the pattern here, and this is the little 3 to 4 day handle down to the 20-day moving average. The key to locking in big gains was the opening range breakout. Let's take a look. An opening range breakout, or orb as I call it, is triggered on trade above this opening range, the first half hour's range. Here you can see LRCX exploded on an opening range breakout today. So here it's a gap and go above the 140 strike, and this orb occurs just above the 140 strike and perpetuates a move exactly to the 150 strike. I think today's high was 149.90 something. So here you can see the bowling for strikes play going to expiration. Remember, this is a 10-minute chart. So here's Friday's action, here's Thursday's action. So you can see this breakout here above the 140 strike left me with the assumption that there was going to be a nice follow-through move, and you got a gap and go. We were triggered long right from the get-go here on the follow-through above the 140 strike, and then you have the opening range breakout above the 145 strike, and it pushes all the way to 150 where it pulled back. I pinged members to my private Twitter feed to sell at 144.50, assuming the push to the 145 strike would take us out. I chose to take the gift horse profits, but I could have chosen to hold a piece. I could have trimmed and trailed the protective stop looking for the 150 strike. Indeed, when LRCX cleared 150, it extended to 149.88. That was today's high. The tail wags the dog on options expiration indeed. The next setup I want to show you is NTNX. And we want to take a look at a daily. Here we go. Subscribers took a long position intraday on an intraday tweet on my private Twitter feed earlier this week based on, again, a cup and handle pattern. Let's, there we go. And this is the cup and handle I'm talking about. Again, it's more like a Stein and handle, as I call it, than a cup and handle. But you can see this pattern here and the little 3-day handle. On Monday, it looked like NTNX. This is right here. Monday, it looked like NTNX was poised to pop out of the handle. We went long, assuming that trade over the 45 strike would see NTNX magnetize to the 50 strike, that the 50 strike would be tickled. Interestingly, NTNX left a topping tail on Wednesday right here. In other words, it ran up and closed where it opened, leaving a topping tail. From above 50, reversing from a high, above the 50 strike, reversing from a high of 51.67 up here to as low as 48.38. However, NTNX never followed through. You can see it never traded below Wednesday's low. Follow through is key. Setups are only setups and not triggered unless there is follow through. Consequently, NTNX squeezed back above the 50 strike today. If they're not going down and the line of least resistance is up, they're probably going up. So these are two simple steps in order to focus on to capture explosive gains. You see a pattern here. You see this bowling for strike strategy verging on a triple top breakout at the 45 strike. The odds were that you were going to follow through. And let's go back to Tuesday here, and you can see how an opening range breakout signaled higher. Here you go. So Tuesday was the 15th. And you have an opening range breakout right here. It's right out of the box. It's strong. We went long on back in here, and here's your opening range breakout and the spike right up here where we took profits. So that's it for today. Have a great holiday on Monday, and I'll be back here on Tuesday. Appreciate your time. Thanks for listening.